if you are a woman getting divorced and you have a business interest, or your ex has a business interest, or you own or are part of a business, then this is the video for you. If you need to be thinking about how it gets valued, then watch along. My name is Kerry Griffiths. My company is Willow Brook Lifestyle Financial Planning, and this YouTube channel is dedicated to women who are getting divorced to help make you money savvy and confident during the process. I'm joined by an amazing guest today. It's Tom Wacher from Creston Reeves, and he's a forensic accountant. And I've invited him along so I can pick his brains and ask him all about business valuations and help get you feeling confident about what is likely to happen. Welcome, Tom. It's lovely to have you here.
It's lovely to be here. Thank you very much, Kerry.
Tom, do you want to just tell us a little bit about yourself?
Yes, I'd be delighted. So thank you for the introduction. Very kind. I'm Tom Wacher. I'm a FCA, so I'm a chartered accountant, and I'm a member of the Academy of Experts. So we're trained to give experts evidence in court. I've been an expert now for about 10 years, or slightly more than 10 years now, specialising in business valuations and other financial investigations. So yeah.
Perfect person to have along for this kind of discussion then. Tom, can we kick off with just finding out a little bit about why businesses are valued in divorce?
Yes, absolutely. So obviously when Form Es are completed, there's a list of assets and values attributed to those. And in some circumstances, one of the main elements of value can be the company that is owned by one of the spouses. It could be that they own the company outright, or that they own a proportion of the shares in the company. And valuing the company isn't as simple as just reading the accounts. So the accounts will include a statement called the balance sheet, which sets out the assets and liabilities and purportedly gives a value to the company. But that isn't the real value of the company. It doesn't recognize intangible assets such as goodwill always. Yeah. So it's very important to get a true valuation of the company to make sure you're not just taking the figure off the accounts.
That makes sense. And who would instruct the valuation typically?
Well, it can be instructed by many different people. In most cases, we find that we're instructed as a single joint expert, so that's on behalf of both parties. And in that case, one spouse will probably be invited to select 3 experts. They'll present those 3 to the other side, and the other side will select one of those 3. So that's quite often the process that we go through in being appointed. But in larger cases, it can be party appointed, so each side appoints an expert. And in most cases, we take instructions from the solicitor, but on occasions we also take them from the litigants in person themselves. So it's a whole mix of people, but that covers most of them.
Yeah, that makes sense. Could the business owner or the director's own accountant do the valuation? Is that a good option?
Well, they can, and we have seen it done. Obviously, there are impartiality concerns there on occasions, because obviously the accountant is likely to be working for the company, and they're likely to have a long-term relationship that is going to sustain, and they want to give the right answer to the right person to make sure they continue that relationship. Now, that's not to say that they would, but in court you have to be perceived to be independent, not just act independently. So they could act perfectly independently, yeah. But in court there is this requirement to be perceived to be independent too. So that's the main issue. And what you'll find is that, you know, the company accountant also doesn't necessarily have the qualifications and the background of valuing businesses. They might have a basic understanding of how to value businesses, but the expertise that, you know, you build up over time, many of them won't have.
Yeah.
So we would always recommend getting an independent valuation done.
That makes sense. So how would you go in about finding that independent person, you know, finding the right expert for it?
Clearly there are a number of ways of doing that. There are registers of experts, so you can go to the Academy of Experts, and they'll have a register for, you know, whether it's a medical expert you need or a valuation expert. Yeah. You can go to those sorts of people. Everyone uses Google nowadays, don't they? So but I think the key thing to look out for is the experience and the CVs of the people involved. What you don't want to do is to find yourself with an expert who gives you the wrong answer, because the court will in many cases be bound by that answer, and it will be very difficult to get it overturned or corrected. Now, price is the other option, and you will find a whole range of different accountants at different levels and experience working for different people. So it can be tricky, and every case probably needs to be judged on its own merits. You might find that the valuation expert for one particular assignment isn't the best one for another one, and that might be because of the industry it's in or because of the size of the business we're looking at. So those are key factors, really.
And I would guess, Tom, then solicitors would normally help you with this as well. They would have experience of working with certain forensic accountants and understanding that nuance.
Yes, so we have good relationships with lots of solicitors, and they will have all those relationships with all of the experts that they need. They are very well placed to not only select the right expert, but also to advise on the instructions for the expert, because not every valuation will be the same. You will have valuations where there are specific complications that need to be addressed, and if that's not set out in the original instructions to the expert, then they might be missed. It might be brought up by the expert, but that can cause complications, because often by that point you've started down the process. You've probably been told your fee by the court, and if you're going to make it more complicated, then it becomes difficult. So we would always recommend a solicitor is instructed, and that they give us the instructions, having agreed it with the other side.
Yeah, that makes perfect sense, because they'll know kind of the scope of what they need to find out to explore the areas that are kind of important within that specific divorce as well. I've had a few cases. Oh, carry on, Tom. Sorry,
they will also know the sort of legal requirements as well, of what they can and can't ask, because sometimes we do have that as a bit of an issue, where we're expected to be able to do a certain amount of work, which actually within the legal framework isn't possible.
Yeah, that makes sense. So, Tom, I've had cases where the valuation has come back, and the client has not been certain whether or not what has come back is a true valuation, and has asked me on a number of occasions to look at it for them, as a financial advisor, which I'm not best placed to do. In a standard case, is it worth getting a second opinion? If you get a business valued, is it worth just always sense checking it with another accountant, forensic accountant?
I think everything comes down to the value, doesn't it? I mean, in some cases the value isn't there, and it might not be, but in the vast majority of cases I would suggest it's sensible to have someone give it the once over, even just a very quick look. Does this feel right? Because in many cases we have seen valuations performed where just from a very cursory look at the accounts and a valuation report, you can tell that the two don't marry up. Now, we can tell that, and I'm not sure that necessarily you, with all respect, and clients would be able to do the same. So yes, it is sensible to have someone do that, but what I would say is that there's a further role into that as well, which would be called the shadow expert role, where you're not appointed by the court, you're appointed by the parties themselves, and your role is to consult, to advise the parties as to what might or might not be wrong with the valuation report. So in that case, we would go through the valuation report in detail, and we might come up with a list of questions to ask to the expert themselves, and that can be a very valuable exercise, because the expert will almost undoubtedly be obliged to answer questions of the appropriate nature. You can't ask all questions, but within reason you can ask quite a few.
Brilliant. Tom, is there anything else that you think I should have asked you? I'm going to ask you a little bit about relative costs, and so that people have a perspective on this, but is there anything else you think I should have asked you that would be useful?
Well, going back on the instruction point, there was a couple of points around that. So the basic parameters for most of our valuation is to value some shares in a company. Now that requires valuing the company itself, and then the shareholding that goes in the company. But there are other instructions that sometimes are worthwhile investigating, and that might be whether the company has the ability to raise a capital lump sum, which might be relevant to the circumstances, or in other cases, whether it's expected that it will be able to generate an ongoing revenue income stream to one party or the other. Now, obviously, they have important considerations. They're important in considerations for the court. Linking into that, then you've got tax aspects as well. So, if someone's asked to sell a large holding of shares, there will be a significant tax liability arising on that, and that has to be factored into the calculation. So there's that side of things, and on the other side of things, there's actually the what's the right word? The credibility of the underlying accounts.
Okay.
Are they accurate? We have had cases where particularly cash businesses, where the accounts aren't necessarily fully reflective of the company and its full trade, and therefore of the value of the company, which is an important factor.
And you can make reference to that. Obviously you're not going to be able to give a value on the cash side, but you're able to reference, actually, because of the value, because of the representation that the cash is within the business, you can point out the risks involved with the valuation. Yes,
so certainly as part of some of these business exercises, we do a benchmarking exercise, and if you're not reporting all of your turnover, then your margins won't be the same as the rest of the industry. So you can observe these things, and in some cases we can have instruction from the court to go further and to actually almost audit the results that we're relying on. Now, that doesn't happen in the majority of cases. The majority of cases we're asked just to consider the accounts and base our valuations on those, but it is something that is worth thinking about.
That's been super useful. The last piece of information I just want to leave the audience with is just a gauge of how much, kind of in what region it costs to instruct a valuation.
I can give you the one end really quite easily. So most valuations, most start at around £5,000, but obviously if you're talking about a very complex group structure or a very large company, then the costs can go up significantly from there. There are occasions, and we have done them, where the valuation is less because the company is very simple, particularly say a property holding company where the company really just holds one property in it or a couple of properties. There's less to worry about there, so it can be less, but in the majority of cases I'd say they start at about £5,000.
Brilliant. Tom, thank you. You've been an amazing guest. I'm going to put your links below on the video, so if people want to reach out and kind of discuss what you can offer, they'll be able to do it that way. And then just want to let you know that our next video is going to be all around hidden assets. I've got a brilliant solicitor joining me, and we're going to talk about what the barriers are to finding out exactly what your ex owns and is disclosing, and what the court process is around being able to establish that. So Tom, thank you for today, and catch up with you soon. Take care.
Thank you, Kerry. Bye.